Hi everyone, the EcoLab webinar will begin very soon. Please sit back and relax for the time being. Hi everyone, the EcoLab webinar will begin very soon. Please sit back and relax for the time being. Hi Abraham.
Hi, Ryan. Can you hear me well?
That's great, that's great. So we'll wait for a while for the rest to join in before we start. Then I'll give a quick introduction and I'll introduce in, then you can begin. So at the end, we can do a Q&A if depends on whether the audience is comfortable to voice out directly, or we can use the Q&A function and I'll voice out the question for you to answer to it live.
Okay, not a problem. Can you hear me correctly?
Yes, it's okay.
All right.
Hi everyone, the EcoLab webinar will begin very soon. Please sit back and relax for the time being. Hi everyone, the EcoLab webinar will begin very soon. Please sit back and relax for the time being. Hi everyone, welcome to the EcoLab webinar series. Thank you for joining us for EcoLab webinar series. My name is Ryan Jin, and I'm leading the Smart Cities and Future Mobility effort at EcoLabs Centre of Innovation for Energy, or EcoLabs for short. I'll be hosting this session. EcoLabs, jointly established by the Nanyang Technological University, Enterprise Singapore, and Sustainable Energy Association Singapore, SEAS, aims to build and accelerate deep tech energy innovation capabilities in Singapore to support the nation's future energy transition. This joint initiative aims to help Singapore-based energy startups and SME successfully commercialize their scale their innovation effort by providing them with the following: translational research, living test bed, innovation programs, funding partners, and community platform. As the COVID situation is ongoing, we are organizing the EcoLabs webinar series to continue the engagement and interaction with our partners, where we invite industry experts to offer their insight on respective topic weekly. This webinar series comprises of 5 themes: Startup Series, Insight Series, Corporate Series, Investor Series, and EcoLab Series, each focusing on different aspects of the innovation ecosystem. Today's webinar is part of EcoLab's Insight webinar series to provide industry insights to understand and navigate the innovation journey in the energy sector. You will also learn about the different aspects of the startup ecosystem, what to look out for, and where are the different opportunities in collaboration. Today webinar is also part of the partnership between EcoLabs and Arc Capital, where Arc Capitals will provide EcoLabs affiliated startup and SME with strategic advisory support in investment banking and market growth. Today's webinar titled Lesson for Energy Companies from Capitalization of Pharmaceutical and Biotech R&D and Startup, presented by Mr. Abraham Cinta, founder and CEO of Arc Capital. He will draw a parallel between how biotech companies leverage their intellectual properties and research using public or capital market to raise capital, and how most energy companies don't, crystallizing valuable learning point for energy companies. Mr. Abraham Cinta is the founder and CEO of Arc Capital. He graduated from St. Michael's College and University de las Americas, Peru, with a joint bachelor degree in International Business Administration and a master's degree in Investment Banking from the University of Wales. Mr. Abraham is an executive manager and investment banker with a broad experience in public listings and acquisition transactions, with a focus in IPO and M&A for mid-cap enterprises. He has successfully helped over 12 companies listed in the US and has been involved in transactions over $2 billion US. He also has experience at government level from his time at the Mexican Ministry of Welfare and extensive experience in top management in industries such as finance, oil and gas, logistics, food and beverages, and e-commerce. Just a little bit of housekeeping. Towards the end of today's sessions, we will have about 10 to 15 minutes for Q&A. If you have any question throughout the presentation, You can key in your question in the Q&A icon right below the control panel, or raise your hand so that we can unmute you to voice your question during the interaction session. Now, without further ado, I would like to pass the session to Mr. Abraham Cinta, founder and CEO of Arc Capital. Mr. Abraham Cinta, please.
Thank you, Ryan. Thank you for the kind introduction, and thanks everybody for attending this webinar. I'll try to make this as much entertaining as educational as possible. Understanding the limitations that sometimes communicating through Zoom has. Okay, so let me see. Okay, so I'm not so sure if I can share my screen with you guys, but in case I cannot, not a problem. So as Ryan said, my background comes more on the finance side of things. In this case, as you will know, I am not an energy expert. However, I do come from the investment or banking side, which is one of the biggest struggles that all energy companies go through. Everybody from startups to projects that are more mature, they will eventually come across that point in time where they need to raise capital, and that capital might come, might not come. So part of what we are trying to do today is try to draw a parallel. For us being in banking as our capital, we are fascinated by the pharma or biotech world out there, especially because these are companies that they're very similar.
Hi, everyone. Sorry, you should be able to share screen.
Can I do that now? Okay.
Yes, you can.
All right. Let me share screen. There you go. Okay, give me a second. There you go. I think, okay, there you go. So as I was saying, the world of the biotech companies is something that it's very amusing. And when you start comparing the energy companies and the biotech companies, they're not that different at all. However, the biotech companies always steal the show. And it's just not compare them to energy companies, but in general, biotech for the past 10 years has been, the word on the street. There's funds created specifically for this. The amount of capital that has flown there is unbelievable. But when you look at closer, it's not that different. So let's just go a little bit about why biotech companies and not energy. Why the money goes so much into this particular area. Is it a matter of structure? Is it a matter of an upside? Is it a matter of geography? Is it a matter of management? Is it a matter of exit? If you look closer, both energy and biotechs are very similar. The upside potential, you can always argue that there's always a bigger market for pharmaceuticals. However, based on your risk reward criteria, the energy sector tends to be less riskier, but still you don't get that much capital. The geography part of things, it might also be an issue, whereas energy companies typically tend to be more localized to their country or region, whereas pharmaceuticals, they always look at a bigger scale, but that could be argued. Is it management? And we're going to talk about this in depth. Management in both areas, I think they both come from a strong academic and research background, so that shouldn't be a problem. And then exit, which I think is one of the biggest issues. So let's as this slide said, let's look at the incredible expanding universe of biotech stock. So the biotech stock, like I said, is just amazing. The equities, the public market footprint, it's been amazing. You have had companies that have been going public by the dozen per month, whereas in the energy you don't see that. So even though worldwide the number of the companies going public has reduced because companies have gone bigger, the pharma sector continues to be very, very strong. Some of the factors that are behind this growth is that there's always a strong pipeline of innovative technology coming in. You always see, if not monthly, some new technology or someone trying to come up with something innovative. There's a lot of investors behind it pushing it. There is banking opportunities that you wouldn't find in other sectors. And that has contributed to the growth overall of the industry. Um, if you see the chart that I have here, it is quite telling. The blue line that you see there, it's the number of public companies in the biotech space. And the gray one is the overall number of public companies, excluding the biotech. What tells us is that, since the year 2000 or so, the biotech companies are the ones that are driving the market. Biotech and tech as well. Those two are the ones that significantly moving the needle. But the biotech just keep growing at unprecedented speed. Even today with the COVID, that you were thinking that markets went down 20%, 30%. The reality is that the biotech companies were not. And for the biotech companies, this was just a bigger opportunity to plug in whatever research they had and try to fight COVID as well. And it just continues to go strong. So the pharma sector has been able to withstand crisis, as you've seen in the chart. In times of crisis, you go to biotech. In times of you still go to biotech. But why not energy? Well, we're going to continue talking a little bit about this as we move ahead. If you see these little charts over there, when you look at the amount of companies that are listed in the biotech space, and this is just NASDAQ and New York Stock Exchange, I'm just talking about the US capital market side of things. You have about 600, 700 companies in different sectors, biotech, medical, pharma, and generics and others. But when you look at energy companies, you see a very, very short list. You have Azure, Brookfield, LMI, Nuveen. How come there's only 9 companies or 10 companies in the energy space listed versus 500? So in my mind, and speaking with many investors about this, investors are sitting and waiting. They don't have anything against energy companies, but one common denominator that I found with investors is that they don't get to see these opportunities. And that is interesting to know why. Everybody could argue, right, biotech company, a lot of money because of growth, but just like there's investors for growth, there's investors that like something a little bit safer, something that perhaps has dividend. Those that are producing energy, this is a perfect dividend play because you have a structured cash flow that comes in, flowing every day, every month, every year, and yet they still don't see these opportunities. Is it because these companies get to be there too late? And we're gonna dive deeper as well on this point, but some of the issues that I've seen with pharma companies is that the moment they start, the moment they're born, they're already raising money. Actually, they start with the purpose of raising money. The research is something that they know that is gonna come along the way, and with capital from the money they raise. And to me, and like I said, I'm not an energy expert, right? I just speak from empirical knowledge. The technical side of things on the energy side is I need to have my proof of concept ready before I get to the market. So the mentality of the biotech companies and how they're born and how they're conceived, it's very different. And maybe that's where the big difference lies, to a degree. Like I said, public companies, or let's say NASDAQ, they just keep adding and adding and adding. For the biotech companies, it's very simple. I raise money, I have some proof of concept, I get listed, I keep raising money. If I fail, I'll sell my research to someone else and someone else buys me out. If I make it, I'm starting to make millions and I'm still get bought out. So it's a very clear path to profitability, not only for the company, but for the investors. And I don't see that piece happening in the energy space. I don't see that upside being shown to investors. The upside is either very limited to a project or to a geography or to a particular area, versus the biotech that happens to say, listen, if I have a drug on phase 1 and I fail, I can always go buy another drug and start at phase 1 and phase 2. And if I fail at phase 2, if investors are still believing in me, I can go on and on and on and on and on forever. So the DNA of management, the mentality of investors, of how they see this, it's very telling. Not for anything, and it's funny, not for anything, bankers are becoming scientists. Bankers love this game because it's a finance game more than an R&D game, and maybe I'm being a bit cynical, and I'm not appreciating the value of the research, of the value of the whatever these companies can bring to the world, but the realities from a cold finance and dollars and cents point of view, you want to have someone that is pitching the numbers and cents rather than something to perhaps save the world. Okay, and we're going to talk a little bit about the packaging of energy companies as well, because I think that's critical, and that has been one of the issues with in the past, and maybe going on further with some of these companies. But no, there is a value creation in the biotech companies that is massive, and it's reflected in the markets. There's also a value creation in the energy space, but that is not being capitalized by the smaller companies. And like I said to you before, no wonder why bankers become scientists. Biotech, it's being one of those sectors that attract everybody in finance to just go and do this because of the amount of money that flows. You're not seeing that inflow from the finance guys into the energy yet. And the ones that do, you see that there is a significant change in the mindset. But no, with that said, there's ways to do that. So, how could this? Why do energy companies fail? And maybe I'm being too pessimistic, but I like to see what are the issues and how these issues we can fix them. Let's talk about clean tech. And by talking about clean tech, let's also compare biotech, right? Any clean tech, it takes a lot of time and a long time to get to a point where you're commercial, right? That's very simple. That's very obvious. If you look at biotech companies, it might take you 5 to 10 years to get to market, if you ever get to market. With the other R&D and energy, it might not be that long, but it's a long, gestational period. However, the part of clean tech, it gets to be expensive to scale. Whereas the biotech, you're just burning cash. You only need to just pay the scientists until they strike gold. Versus the energy space, if you have a product, you need to go out there, test the product, deploy the product. But with that said, the way of packaging, I think it makes the difference. One of the issues as well that I see in the energy space is that energy is a commodity. It's a commodity game, right? The competition in the sector is focused on low margins. Sometimes adding more research to it makes it less profitable. Therefore, there's less incentive. This happens in the energy crisis back in the early 2000s when the oil prices were going way high, $100, $100+. Everybody was thinking, we need to find cheaper ways to do this, but energy is cheap, right? Oil going negative, oil staying at $20. The only argument for someone to invest in this is just that you're saving the world, right? You're trying to go clean, and there's a lot of green initiatives, countries, you name it. Not to say that all of those countries, some of them they're just it's from the mouth out, not really an internal change. But you're competing with a very established industry that particularly doesn't take you kindly, versus the biotech, which you're also competing with the big boys, and they also don't take kind the competition. But there's a different mentality in the pharma space that if you make it, I'll just buy you out. And in the energy, you might not have that. If you get to be big, nobody's really. It's less likely that you see all of these big mergers. But like I said, but high investment costs in R&D for production with some of these technologies also makes it hard. Whereas in the biotech, you have your trials that, with $1 million, $2 million, depending on how cheap you do it, you can have proof to market. Like I said, it's just a different industry. I'm not comparing, but we'll get to the root on why I believe that this has a solution. So, for example, in the case of solar, which was very telling, especially here in China, everybody doing solar farms, and I'm going to research materials to improve efficiency. At the end, it never happened. At the end, the crystalline silicon remains to be the main the main material used on the solar panels, all of the other, from quantum dots to thin films, it never took off, and it might never will because it doesn't add up dollars and cents. The same could say about the biofuels, and everything else. But like I said, when you're competing in the space of energy prices, it's really tough because it's a commodity based price. If there is no technology that significantly adds value, it's really tough. So those who are in this sort of industry, there's gotta be a different angle to pitch. Um, and now let's just talk a little bit about where do I see the biggest issue. There has been a chronic lack of successful groups of energy investing in innovation. Like I said before, a lot of these funds, they never get created or they never make any money because the way the companies are structured and the way the company's management view things, it's not aligned to what a typical banker or VC or PE wants to see, which is a clear path to exit, which is a clear growth strategy, which is a clear, the typical world domination. If I'm an investor and someone comes to me and I don't see that drive and I don't see that big plan, it's hard for me to invest because there's other opportunities out there that are offering me that exposure that I don't have in here. One of the things that we typically see in the energy space is that it's very localized. And I'm going to tell you the example of a company that we're working in Mexico. They were doing it's a device like a solar panel that they want to implement in Mexico, and they have this technology. And when you tell them, listen, this device could have very, very, big success in Southeast Asia, they said no, because we want to focus here in Mexico. So when you face this type of companies and they're quite adamant on what's their approach, how can you talk about global domination when you're just focusing on a very, very small market that just recently opened up to produce power outside of the state companies? So the mentality in how you approach the investors is critical. For those of you who are watching that are on the startup idea, startup phase, or want to go out there to raise funds, you gotta sell a bigger dream. That the energy sector is provided to be worth 4.3 trillion. Those are the numbers that investors want to see. And investors are not stupid. Even if you tell me a big number, it doesn't mean you're going to get it. And I also don't buy it, but at least I want to see that drive. And you got to be, as an entrepreneur, as someone going out there trying to get people's money, to show them how far they can get. Don't just tell me that I put $100, I'm going to have proof of concept, and I'm going to deploy, and I'm going to get stable cash flows, because you lost me. I rather put my money in the bank. So the packaging, I would say that packaging is one of the main differences between the biotech companies and the energy companies. The packaging of the biotech companies is amazing. Like I said, it's market share, it's how strategies to market, and if I don't do this, then I can do this other alternative. Versus on the energy side, that I see sometimes is just too focused, too niche. And there's nothing wrong with being niche. But to me, as a generalist, you just reduce your chances, right? One of the other concepts that I guess it's bad that I say this out loud and I'm being recorded, but you gotta stop trying to save the world. Very commendable, but ultimately, when you're talking to an investor, the reality is that they don't care. Even though they say they do, they don't care. So the angle in the packaging, it's gotta be clear. Dollars and cents, a path to exit, a dollar that comes in, when I'm gonna get my dollar back. I don't want a dollar back. I want 3 back. How are you gonna get me there? The value of technology here, I think it plays a very important role. Like I said before, if you're going out there and just trying to make money on commodity prices, tough, very tough, because when the energy prices don't go your way, then you're screwed. because there's no incentive, right? This, let's talk about oil. The oil is a very established industry. The infrastructure, everything is there. If your technology or what you're doing, it doesn't provide me a significant um, upside or significant benefit, why would I, right? Um, there's a study out there from published by the MIT, and I think I can probably share the link with you later on why a lot of the venture capital out there for energy just died in the early 2000s and mid 2000s. But a lot of it has to be with the angle and with the focus. Um, Conversations with our energy expert, who's also looking at this webinar, I hope so. He tells me how some of these energy players out there, they're very focused on working on a particular project, grow it, get fixed income, get these fixed returns, and then slowly going to the next one. And that is a problem when you go out there to try to get money from guys that are raising money from someone else, right? At the end, every money that you go get, it comes from someone else. And a PE or a VC that got money, they also need to make a return. So if they're not convinced that you can make them 5 times, why would they invest in you? So just a little bit of the tip. These are some of the lessons. I think the timing is everything. I think I forgot to mention about this as well, but let's take a look at the biotech companies. They bring investors on day one or before they hit a specific milestone. This is the time where you go get your investors. You don't get your investors when you're ready to deploy or when you just need to build a prototype to get, because the value generation between 0 and 100, it just multiplies. It's exponential. Packaging something with the right timing, you can bring people on board that can benefit at 10 times return versus just trying to call them the moment you just want to deploy your technology, or for example, some of these IPPs is like, listen, I have the land, I have the permits, I need to construct. And I'm as an investor, there's some investors specialized in that, but if you were to go to something in the private equity or VC, they're like, or a bank, like, okay, I'm just gonna make 4%. Versus if I would have started with you this process, I could be making perhaps a 400%. Packaging the deal, like I said, is very important, and this is where the management, maybe need to change the chip. Honestly speaking, for some investors, all of this technicality is just too much. You gotta be concise. You gotta speak the same language as the people you're talking to. If you're talking to an expert, it's great to talk about the details. But if you're not talking to an expert, you might lose them, and it typically and often happens to me. So that is very crucial to have in mind. And the packaging not only means you as a company, but also you as a management team. You might be, and this will respect, you might be the guy with the science behind, and you've been working 10 years on this technology, great. But as an investor, it's good to have you, great. But I also want to see who is the guy that is going to take you to market. I want to see an experienced manager, an entrepreneur that has done this and succeed. So that's some of the things you do see in the biotech space, where the technology comes from someone, but the faces of the company is someone else. And like I said, it's just the faces. It doesn't mean it's the brain behind it or the operation behind it. But the packaging of the deal is very, very important. Just as an added point to that. Last year, we completed the first IPO of an energy company in Southeast Asia, for all it matters, in Indonesia, the first direct listed of an Indonesian company into the New York Stock Exchange, and this was a oil and gas exploration company. The guys behind it, the Indonesian team was a great team, 40 plus years of experience in the market, worked in Indonesia for BP, for the big names, but very local. So when you go out there, the investors want to say, okay, great, but how are you going to grow this into $1 billion business? And you might have all the experience, but have you had any experience going public? No. So what we have to do is, we put a team around them. We bought an American hire CEO, what a CFO, package the deal. And by packaging the deal, even though these guys don't really will have any impact on the operations of the company, the valuation that we wanted was increased, and the amount of money that we wanted, we got it. So the value of packaging, never lose sight of it. Maybe that's one of the reasons that the markets eventually crash, because people rely too much on the packaging and don't really go into deep. But believe me, that is really important. The partners and corporations are, which is the next point. I think that is something that you don't see that often, and you do see that very often in biotech. You see 3 or 4 biotech companies forming an alliance, sharing research, sharing data. You have the pharma companies going into the labs of bigger companies to test their product. In the energy space, I get the feeling, and again, probably an expert here can maybe correct me if I'm wrong, but I don't see that ecosystem being built for having a shared platform where the technology of one plus the technology of the other one could be a solution to an issue. On their own, they might not be really interesting, but once you combine them, they might. So a cooperative environment can definitely help and push this forward. And this is not only between startups, but also with the bigger players. If you have a project, an idea, you should try to also go to the bigger guys and collaborate with them. I fail to see what's the reason why they wouldn't, right? At the end, if you go out there with a technology to test it on them, you effectively are using their resources, and on top of that, you might be attracting a potential buyer or an investor for you. The other point is, search a market that appreciates and provides support. And this goes back to the point that I was mentioning about Mexico. And I think maybe all of you are, or most of you are based out of Singapore, which is a great market to be in, where there's incentives, there's grants. It's an amazing jurisdiction to do business with. But if you're not, then you're setting yourself for trouble. Like I said with these guys from Mexico, forget about just the market you're trying to attract or trying to do business. But if you go on from the investor side and I need to put my money in you, why would I invest in a Mexican company where I don't know if there's rule of law, I don't know what's going to happen? So looking at jurisdiction, the last one is it's just try to match the way a lot of these biotech companies work on, which is construct a milestone-based program, a milestone-based investment, because that's, and maybe you break it down, because that's when it becomes more attractive and more you get a better understanding of what's happening, right? The amounts of money thrown into biotech, don't get me wrong, there's a lot, but they have to go through these processes, right? If you look at it, for them, it's very simple. Preclinical, phase 1, phase 2, phase 3 market. You have 4. You have 4 stages. Those stages are set, and as you pass from stage to stage, there's more money coming in. The same could be done in the energy space, right? You can go from research to prototype to test market. The energy is a very broad market, so I guess each one of you might have to think of something like that, but that helps. Going out there and say, I need $10 million to market, that might be too much. Do you really need $10 million? So it's all about putting all of these 5 points, and I guess combined with that management DNA, that switch, that when you're researching, put your research hat, but when you're out there with investors, you have to change the hat. You have to act like them, you have to talk like them, you have to say the right words, the right things for them to be interested. And if that's the case, I believe that there's a huge opportunity for the energy space to be like the new farm. Funny enough, we always talk about why this is interesting and this huge potential, but at some point, people need to go back to the energy space is critical. We all need energy. It's also day by day, but it doesn't get the attention. And I think that the time will come, and it's better that the companies are prepared, right? And I think the changes that need to be done for this market to grow is it starts with companies like you guys, like the smaller companies, that they change the chip, that you have a new wave of companies that understand what investors want, and that eventually can provide investors money, because the moment you do, the money just keeps coming. So with that, I will leave it like that. I think we can go into Q&A. I didn't want to take the whole hour. I didn't want to take the whole hour talking, but I guess we can get into the Q&A and make this a little bit more interactive.
All right, thank you so much. It's very informative. Do we have any questions from the floor? You can actually press the red raise hand icon just at the control panel, and we'll be able to see you and unmute you. Do we have any question from the floor? All right, we have one from Joshua. Hi, Joshua. You should be able to unmute yourself and ask the question.
Yes. Hi, Abraham.
Hi, Joshua.
Thanks for sharing. I just want to get your perspective on this. Pharmaceutical and also the environment problem. Environment seems to be a shared problem. Countries polluting somewhere else,
Right.
but the problem is transported another place, stuff like that. So, do you think it's because the problem is not shared rather than specific to me as a country or polluter? That's why there seems to be less interest in also investments.
Listen, the investments need to be based on dollars and cents. It's sad, and what you're saying is right. To me, it's about dollars and cents, and the rest, it's someone else's issue. And if I'm a country, then okay, the other countries will take care of it. But ultimately, nobody thinks as a country. You think as you think as an individual. It's about dollars and cents. If we can find a way to turn this into money, if cleaning can make money, if transforming this can make money, then you have everybody's attention. But just to save the world, and again, I said it's really bad. It just doesn't work.
Okay, got it. Thanks, Abraham.
Right, thank you so much. We have Naku asking a question. Naku, you can unmute yourself and ask a question.
Hello, can you hear me?
Yes, we can hear you.
Oh, sorry. Yeah. Hi, Abraham. Thanks for the presentation. It's quite interesting that you took this as a comparison point between biotech and energy, especially in certain aspects they're quite similar. But I wanted to bring you back to one point where you said that it was just reinforced now that investments are on dollars and cents. Right. Now, from my understanding, it may be limited of the biotech industry. It's that the markup value is pretty high. So as an investor, you would definitely see much more of a return on investment. But the energy system has been designed such that in dollars and cents, energy is cheap. It's been the whole scenario, the whole system, when it's generated and how it's transmitted, it's designed to be cheap. So right. How would you package this and bring it up?
The thing is that obviously you might not be able to change that dynamic, right? But I also tell you the part of, for example, the generics in the pharma space. So the generic is basically you're selling me a drug that already exists at a fraction of the cost, and they still get funded. There's an investor for everything. There's investors that are more risky. There's investors that are more conservative. The ones that are conservative, the energy plays are the best for them. And it just makes total sense. Because if you're in the energy space and you're an investor that wants something stable, there you go. That's your goal. But I think it has to go with the companies. You see, it's maybe the energy is regulated and the amount of money you can make it is, but the output of energy is not. Right? You could produce more energy. You're not making more money, but you're producing more energy. So that's where I think it fails to translate. If you have an example, you have 1 megawatt, you could do 100 megawatts, 1,000 megawatts. dollars and cents are there. Yeah, you make not a lot per megawatt, but once you have 1,000, then you have a lot, right? And of course, the type of investors that you look at are different, right? There's a risk appetite, and it's got to be risk adjusted. But even risk adjusted, you don't see that many investors going into energy space just because there's not that many opportunities packaged correctly and offered correctly to the investors.
Abraham, if you don't mind, if I just jump in for a second.
Go ahead, Jiggy.
Knuckle, thanks. Knuckle, the issue with, so I just want to give you an example, right? So there's an Indonesian company with whom we were working, and Abraham and I, we were just discussing it the other day. They have a fantastic reservoir from which, you know, they can monetize, they can get their generation output, they can get their capital inflows. But when given the opportunity to sort of exploit another resource in a different part of the region, which is again something that Abraham has discussed, they simply refused because they didn't want to go beyond their own risk appetite and beyond the fixed income methodology that some of the conservative investors prefer. And this again sort of comes down to the engineering mindset of being very focused and being very methodical in going about and getting the product monetized. So if you have, for example, a solar farm, you know that it takes a lot of time, a lot of energy in developing the entire thing and then monetizing it. But if you want to do that again and again and again and again, a lot of the investors prefer that. A lot of the entrepreneurs, they don't. And it's not something which we see much in the pharma space. It's exact opposite of that in the pharma space, where every person who's actually developing a business, they want to do more and more and more of it, regardless of how good that person is technically. But in the energy space, a lot of the technically adept guys who develop the businesses, they just stop developing it further and they restrict themselves. And I think that's another part of it, which Abraham has mentioned a few times now, but it's something which really, really does come down to the mindset of the entrepreneur, the energy entrepreneur, versus the mindset of the pharma entrepreneur.
Okay, thanks, Gerajan. Okay, no, what you spoke about right now does make sense, but then what I would say is that, especially in the energy sector, you know, diversifying requires more resources. It again brings you back to, you know, point one or like step one. And there's again that it's it's again a low margins, high competition sort of area. And especially to you know, ramp up and scale up again would take, the scale is too high.
On the energy producing side of things, yes, but I also can tell you, and to me, it's always about money. If you have enough money, you can grow as big as you can. Am I correct?
Sorry, could you say that again?
If you have enough money, then you can grow exponentially and you can expand, and that is never a problem. So the principal issue here is capital, correct?
Yes, I would say that.
Right. So
yeah, you can bring it down, boil it down to that. Yeah, expensive to scale, but if you have enough capital. Yeah.
But if you have a proper vehicle where you can fund yourself, an example like a public company, where every time you sign a new location, you can go out there and raise $10–15 million, and that issue is solved if you have the proper funding vehicle. I'm oversimplifying things, right? But you can see the examples of public companies, Terraform, Azure, they just keep raising money. And you can say, oh, the companies are bad, doesn't matter, they can keep getting money. And with that money, they have turned that engine. And that engine eventually gonna get them to a certain point where they already generating too much that they don't really need to raise more capital, which something similar happens to pharma. But the issue is capital. And to me, the way to solve it is with the right vehicle and with the right approach. What you're saying makes sense. I want to go big. Okay, great. So that's how you start getting big money, when you want to do that. But if you don't want to do that, then it's hard for someone to pay attention to your issue, right? So Just my opinion.
Okay. No, thank you. Thank you. It's an interesting discussion that we had. But yes, I understand your point, and yeah, I take this. Thank you.
See, one thing, sorry, I just want to top up on that, now what Abraham just said. One thing it comes down to is that a lot of the energy companies, you take solar companies, NTU has a lot of entrepreneurs that have come out that have started up their own solar companies. A few of them have ventured into wind. Some of them are looking at biogas and a couple of other different technologies. Now, my question would to any of them would be, okay, now you have a couple of megawatt under your belt, you have some experience in how energy projects are to be, brought up. Why don't you get into hydro? What stops you from getting into hydro if an opportunity is presented to you? All you have to do is the development, right? You're not looking at the question, and the answer that I usually get is, well, I don't know hydro. I don't know the technical capabilities of how hydro project is to be done or how many hydro is to be done. Well, okay, so what? You can always hire talent that knows these technical aspects. But your experience of raising capital, of deploying that capital, and managing it, that cannot be really replicated. You can always hire somebody who's technically adept, and that's what a lot of the pharma companies also do. They just go out and hire somebody who does drug research on a different disease, or they just go in and buy another company, or they just get the capital. They go to the capital markets, get the capital required to acquire these assets. It is just about changing the mindset, right? Money is definitely required, as Abraham said, but you need to also change your mindset. If your mindset is stuck, I'm a solar guy, that's all I'll do across my life, well, then that's all you will be. And you will always get competed by those guys who are in solar. You'll never be able to diversify yourself.
Okay, thank you. Makes it quite clear. Thank you. So it's basically what you're saying is the unwillingness to expand into adjacencies. Okay,
yeah.
That makes sense. Yes, actually, that's true. Thank you, Ram, and thank you, Gerajan.
No worries.
Thank you so much. So we have another question. What will be the tipping point for energy business to drive value by intellectual property as it is like in the pharma and the bio industry, instead of driving value by economies of scale or cost game here?
I think one of the ways to do it is put a value to the technology itself. I see that sometimes people want to develop a technology and they want to implement it by themselves. So now that I have this tech, let me deploy it and let me show the world, versus actually going out there and trying to sell that to someone. It's complicated, but to me, the tech should be a tech play. Sometimes a lot of the tech projects that I see, it has attached a deployment of the tech. Maybe you're not the one to deploy it. Maybe your tech needs to be completely sold to someone else that can take advantage of that. And that goes to some of the ways, like I said before, where bankers become scientists, because they don't care. They just go out and buy a tech that they believe is attractive. The guy who owns the tech gets, or the patent or the R&D gets 5% of the company plus some royalty, and they go drive it and raise capital. I guess that when the energy tech out there could be sold to other people, could be, that there's interest of people buying it, the energy players are buying that tech, that's where you will see a real appreciation of the tech and not just so much the cost game or the scale out there. When it's a real tech that could be applied, at all levels, or at least within the sub-industry.
Yeah, and that's actually a very good question. There was, I think NTU itself has had experience of other researchers in other countries through other universities developing technologies and trying to come to Singapore to find investors or to deploy those technologies. And many a times these guys will just develop an IP and that's it. They're not letting somebody else deploy it. They really want to be part of the entire thing and capture more and more value. And the tipping point will actually come in when you have somebody who, let's say, develops an AI in energy management for a building, and develops another similar tool for industrial energy management, or for commercial energy management, or whatever the case may be. But when you keep developing those IPs and letting those IPs get gathered up into a public company, the company just keeps buying it. That's where the value just goes up. If you have a public company that buys a pharma IP, that buys a particular drug or an antidote to a particular, let's say, a snake bite, right? The value of that company will go up, obviously, right? It's just about announcing those things. It doesn't matter whether they can actually deploy it, and it doesn't matter whether they actually have that antidote against the snake bite deployed across the globe. They just have it. They announced it. Their value goes up. Some of that money goes to the guy who actually, the researcher, and they got their money, right? It's just about capitalizing whatever you've been able to develop. And the same thing can be done over here. You have perovskite panels being done by Oxford. Why are those guys looking at, are those guys really going to develop perovskite manufacturing and then perovskite solar IPP and then perovskite solar O&M? They shouldn't, right? It's just about capturing the value at the maximum can and then letting somebody else take it forward.
All right, thank you so much. I have another question here. So just now, Abraham, you mentioned that timing is everything. Considering the wider market sentiment right now because of COVID situation, do you think this time is actually presenting a good opportunity for the energy startup? And what can energy startup do at this point of time to survive, to grow, or to scale?
I think that with everything that has happened in COVID, right now it's the time where startups need to start preparing. Honestly speaking, monies for startup companies, it's drying up for now. I don't see the VCs being very active. Monies are going towards the bigger players just because people want to play it safe. With that said, the world needs to come back to normal, or call it the new normal. I think that we're looking at a 2-3 months period of time where there's going to be a little bit of a dry up. But this is the perfect time with companies. They need to package themselves and they need to see how the markets are reacting. Like I said, some industries are being favored by this, like pharma, but I don't see in the energy space, with oil prices being as low as they are, maybe we have to rethink our approach. Clearly, we're not going to beat prices of what they're going to be soon. But to me right now is sort of a surviving phase until, within 2 to 3 months, we can start seeing the new normal and new investors coming out there hunting for deals.
All right. I don't have any more questions queued up. Are there any more questions from the floor? All right, great. So I think we are slightly ahead of time. So feel free to contact us or direct to Abraham if you have any more questions. We will share the slides later this week to all the participants. So as we come to the end of today's EcoLabs webinar sessions, I really like to appreciate our capitals, Abraham, and also GK to help with the organizing the webinars. Thank you for the audience and everyone behind the scene for making this webinar possible. Please follow us if you are interested in the subsequent EcoLab webinars series. Please follow us on EcoLab linking page and join us live this Friday, 22nd May at 3:30 p.m. for the next EcoLab webinar series titled "What Will It Take to Reach the Goal of Zero Carbon Electricity Generation" by Louis Barriston, Head of Energy Research from Cleantech Group. Meanwhile, please give all of us a virtual applause for today's sessions. And thank you so much. Meanwhile, stay home, be safe and healthy. Thank you so much. Thank you, everyone.
Thanks, everybody.
Thank you, GK. Thank you, everyone.
Bye-bye.
Thank you. Bye. Bye, everyone.